Okay, we're going to go ahead and get started. I would like to thank everyone for joining us for our first commercial webinar of 2023. We're going to be talking today about a 2023 commercial economic forecast. And with us today is Edward R. Lawrence III. He is a senior research analyst at Colliers International. In his current role, Ed leverages his 15 years of experience as Vice President of Office Brokerage to provide research support to Colliers brokerage teams and clients. This includes organizing a platform of comprehensive commercial real estate data, partnering with marketing to present materials to win new business, and providing value to existing clients. Ed earned his BA from Denison University in Granville, Ohio, and an MBA from Waynesburg University. In his spare time, Ed serves as a board member for Service Coordination Unlimited and enjoys spending time with his wife and 2 sons. Welcome, Ed.
Thank you so much for having me today.
Absolutely.
Really
We're happy to have you here.
Yep. And you could call me Ed.
Thank you.
Edward Ross Lawrence III is a bit much. So,
yeah.
But
thank you so much.
Yeah.
I'm happy to have you here. So Ed, let's just dive right in.
Okay.
And try to address the elephant in the virtual room. So in your opinion, are we headed toward a recession or are we in a recession right now? I just heard yesterday that Bloomberg had said there's a 100% chance of recession at some point in time in 2023. What is your opinion?
So in my opinion, and it's based upon research that I do on a daily basis, again, to support our brokers here at Colliers, is that there will be a recession in 2023. Likely it will occur in the second quarter. It's going to be what many are deeming to be a soft landing. So meaning that there's not going to be the same level of deep job cuts that you'll typically see with a recession. Mm-hmm. But unfortunately, it will be, unavoidable in 2023. But again, soft landing, and we're expecting to see some good growth in the third and fourth quarters, particularly in commercial real estate.
Okay. So, and is it a soft landing because of the fact that the job market will still be fairly viable? Or what exactly makes it a soft landing?
The soft landing will mean that it'll be short lasting. There won't be deep cuts in the labor market, and that as far as the economic growth is concerned, it's not going to be a major setback in regards to economic growth. I'm sure you read the Wall Street Journal, like you referenced Bloomberg. I was just at an event this morning through the Urban Land Institute, where they had an economist there from PricewaterhouseCoopers, and he'd actually, pulled the room. There were about 150 people there in the commercial real estate industry. How many of you do you think how many of you believe there will be a recession in 2023? And a little more than half of the room raised their hand that they believe there would be a recession. And that seems to be consistent, other than what you said about Bloomberg with 100%. Right. But what I've seen typically is 60 to 70% of those economists and experts polled are predicting, again, a recession with a soft landing. Wall Street Journal polled 71 economists, 61% of them believe that there will be a recession. So, my mindset is, okay, let's predict that outcome, which is not a great outcome, but one that, again, with the soft landing aspect, is that there's a silver lining there, and that we can come out of it hopefully stronger in the third and fourth quarters and have good momentum than going into 2024.
Yeah, and that's pretty consistent with everything that I've heard too, as far as, we're starting off, we ended the year already going down with interest rates going up. First quarter is not looking good. Second quarter now, apparently the recession will quote unquote hit. And then going into the third and fourth quarters, we're going to have a better economy again and job market and get out of that recession. So something to look forward to as we move throughout the year. So in general terms, Ed, what does it look like for the commercial real estate market in 2023?
Yeah, that's a great question. And again, with Colliers International, we're the fourth largest commercial real estate firm in the world. So we're full service. I support brokers in office, retail, industrial, and also multifamily investment sales. So maybe it might be useful to break it down by category. You know, most of us have an understanding as far as the office market because we live it every day. We have anecdotal evidence from our own employers, what their policies are. But by and large, what the pandemic did, and I hate to even bring up the pandemic because we're so tired of talking about it, but as you're aware, it accelerated a trend that was already beginning, which is work from home and
Right.
hybrid work. So it just got us there a lot faster. And as you're aware, employers and employees are having a tug of war a bit with what policies either one of them prefers. So that's had an impact on the office market. It has definitely struggled over the last couple of years. There's no denying it. Tenants have smaller footprints based upon their new policies involving work from home and hybrid. We've seen employers moving towards higher quality amenitized office product, i.e. Class A. Anecdotally, in Pittsburgh, about 70% of lease transactions in 2022 were in Class A product. So we're referring to it as a flight to quality in that marketplace. So the outlook for office in 2023 and likely the following 2 years, because of there are large anchor tenants that are going to be rolling in a lot of these office assets, particularly in downtown markets. It's going to continue to struggle, unfortunately. We're seeing the suburban market faring a bit better than the major metropolitan areas. And we're also seeing trends of office buildings in downtown metro areas being converted into residential, especially the Class B and Class C product for the reasons I just mentioned. In terms of industrial, a couple of factors have arisen in that particular sector, one of which is a big demand for last mile distribution centers and a decentralization of warehouses based upon e-commerce and the proliferation of e-commerce, which again, we were headed in that direction already as a society, but the pandemic sort of accelerated that process as well. So our industrial brokers have been quite busy over the last 2.5 years or so since the pandemic started, really not slowing down at all. Now, rising interest rates will likely curtail some of that growth. Particularly, there's a pretty high volume right now of new product that was already scheduled to come onto the marketplace. So we could see not a softening, but perhaps a slowdown in terms of the industrial market. Retail, but globally, across the country, has struggled a bit overall. Again, I think that, as you're aware, the habits of consumers, was also shaped by the pandemic. And not only that, but labor shortages have really hurt the retail market. And we're not sure if we're going to see any relief there in 2023. Again, anecdotally, in the Pittsburgh market, our retail brokers have been quite active, but I'm hearing from other markets around the country that retail has struggled a bit during the pandemic. And we're not sure how that is going to play out. It's to the point where, a lot of the larger product that was typically traditional retail use, they're looking to convert those to industrial or multifamily, to help reduce the supply of retail and to get a better and higher use out of those products or that product set, if you will. Lastly, I also support the investment sales team in focusing on multifamily. As you're aware, over the last couple of years, the multifamily market has done very well. Rates continue to rise. There's been a strong demand for that type of product. Likely, we're going to see a bit of a correction in 2023 there, where we could see rental rates and multifamily begin to level off, hopefully not decrease necessarily. Again, with higher interest rates, the amount of investment dollars that are going to be going into multifamily will likely decline a bit. With that said, there is an opportunity we see at Colliers in affordable housing, where there seems to be a growing demand for that particular niche within multifamily. So that's something to perhaps keep an eye out on. Again, because we're expecting a soft landing, and again, that's predicated upon January 31st. I think the Fed is going to make an announcement about another rate hike. We had 7 rate hikes in 2022. Right. If we could limit it to just one rate hike, then I think that multifamily could definitely see an upswing along with the other markets, but an upswing in the third and fourth quarters for this year. So
okay, great.
So I know that's a lot of info, but
it is a lot of information. Yeah. Great information though. So really, it sounds like industrial, multifamily, and then I've been reading also about life sciences. That is just expanding by leaps and bounds.
Yeah, so that I'm glad you brought that up, because there are a couple of wild cards involved with these various 4 submarkets, if you will. Mm-hmm. One of them is definitely life sciences. Again, anecdotally in Pittsburgh, with University of Pittsburgh and Carnegie Mellon, they team up a lot in terms of new technologies and medical research. So we've definitely seen an uptick in our market. Pittsburgh is one of the top 15 emerging markets for life sciences, but globally around the country, we are seeing, particularly coming off of the pandemic, you can imagine medical research and development is definitely something that there's a lot more capital going into. So right. those are things that will definitely help to boost really both the industrial and the office markets. Because when you think about it more, industrial does involve more advanced manufacturing facilities, which drug manufacturers, they do lease that type of space at a high volume, as well as your more typical lab or office right. space, which gives a bump to the office market. So I know Colliers, we have talked to our landlords about potential conversions of office buildings, not only for residential use, but also potentially for life sciences. There's a bigger investment that goes into that to be able to provide the infrastructure, but the long-term gain is higher rates, higher right. rental rates, right. and perhaps a higher and best use for those types of products.
Yeah, and it's, you talk about conversion a lot, and I was actually going to bring that up as a topic to ask about. So tell me about the trends on conversion. Yeah. And you had mentioned, the highest and best use. That's what we're always looking for, especially right. as investors too. You want to make sure that the property that you're buying into is being used at its highest and best use. So exactly. What are the trends on conversion of spaces? And then I'm sure there's challenges with that, not only monetarily by converting. What else is involved with that as far as challenges?
So maybe to take a step back, when you look at it from a big picture standpoint, even as a taxpayer, if you live in an urban core area, if you have, let's say, an office building with 750,000 square feet, they have an anchor tenant in there that represents over 60% of the occupancy of the building. As that tenant's needs change, they adopt work from home policies. We've seen in many instances where those tenants are not renewing their leases. They haven't expired yet, but they're on the horizon. The value of that office building may be $200 per square foot now with an anchor tenant, but in 1.5 to 2 years, unless that space is backfilled, the value of that building is going to be diminished, sometimes by over 50%. So therefore, the tax value from that city, from that building, the income that they've been receiving, unfortunately goes away. So we look at it at Colliers as it's in the best interest of cities to look at in providing some monetary incentives to those owners of those types of buildings to help defray costs of conversion, to residential, because you're right, it is a very expensive proposition. I think Gensler architectural firm estimates that really only about 30% of office buildings in the country really it would make sense to convert to residential based upon how those increased costs to do the conversion. But that's not slowing down the momentum, or at least an analysis by landlords to determine, again, through architects and engineers, what would the cost of conversion be and what type of lease rates or rental rates could we achieve if we convert it to apartments. So that's a trend that will definitely continue. And we're hopeful that there will also be a trend where, again, mayors or economic development authorities in these major metropolitan areas around the country will try and work collectively to make incentives available for those landlords, because it might hurt now in terms of the investment, but over the next 5, 7, 10 years, it'll definitely pay dividends for everybody in those areas.
Right. Yeah, I think it's a win-win situation because they will have to go through a lot of red tape too in order to get variances or whatever you need to do. And so working closely with the governmental entity is the way to go. And if they want to bring in more taxpayer base, they need to incentivize to do that. So
definitely. And keep in mind too, affordable housing is something that I think, again, as a society, it's altruistically, it's the right thing to do.
It is. And the need is everywhere. I can tell you that. Your area, my area, our viewers' area, that is on the forefront of the challenges is affordable housing. And that's the only way to increase your workforce too, your labor force. So,
and I believe in Pittsburgh, it's 10% of new residential developments need to set aside for affordable housing. So each city is different with their policies, but it could be an opportunity not only to take obsolete buildings in urban areas and make them more useful and provide, greater amounts from the tax rolls, but also do the right thing and be able to provide affordable housing. So
for the community,
Right.
And I forgot to mention for our viewers, if you have a question at any time, feel free to put that in the chat box and we will address it before we complete our webinar today. So Ed, tell us, what can a realtor, real estate broker, or a lender do in 2023 to be the most successful in the commercial real estate sector?
Yeah, definitely. I think what is going to emerge from the downturn is those brokers and commercial real estate firms that are advisors and consultants to their clients are going to come out of this a lot stronger. I think transactional brokers will struggle a bit. So, my recommendation, and we see it here with the brokers in the Pittsburgh office of Colliers, is to learn as much as you can about the macro effects, what's happening with the economy, to be able to advise and consent your clients. So even when your clients may not be in a position to make a change or to invest now, if you can go to them and provide them with valuable information about the economy, and don't be afraid to make some predictions, educated predictions, quote unquote, guesses, if you will, because that's the value that you can bring during a downturn in the economy. So over the next 2 quarters, I think that it's incumbent upon all commercial real estate professionals to work in that fashion and to provide additional value. Additionally, it goes without saying, there may be off-market opportunities for commercial real estate investors who still have the capital and the wherewithal to invest, where there could be some very good buys out there and some good purchasing opportunities. So again, it's also incumbent upon the broker or commercial real estate professional to keep his or her ear to the ground and to perhaps be able to present unique off-market opportunities to their clients.
Okay. Anything from a lender's perspective that you see changing in 2023? How do you see the interest rates affecting the commercial lending market in 2023?
And just one note, just to go back to your last question, I meant to mention, because I think it's important, from an office standpoint in particular, is to surround yourself with strong professionals from an architectural standpoint and engineering, who can help clients to determine moving forward, again, how will we utilize our office space? What's the best look and feel for that to attract employees back into the office? Architects and engineers are great for that. In regards to your question about interest rates or financing,
and lenders in 2023. Yeah.
So in discussing that with our multifamily team, they do see from more perhaps a quote unquote mom and pop standpoint, as opposed to larger REITs or investment companies, larger real estate companies. You may see more seller financing as a creative way to try and get transactions completed and take them through the pipeline. But again, it's going to be incumbent upon those brokers within multifamily and investment to get creative as possible, to be able to get transactions through, because the cost of capital is so high, and being able to find the financing necessary from a more traditional market. You have to roll up your sleeves and you have to think creatively. And again, as we mentioned, really begin to become a partner with your clients to determine, how those funds can be raised. Again, hopefully leading up to a downturn, like we might see what we'll call a slow session, not a recession perhaps, or recession perhaps, is to rely on those relationships that you have in the banking industry. Because I think those folks, those professionals can lend a lot of guidance and assistance to brokers on how to raise capital, maybe in non-traditional ways. So
it's really interesting that you brought up creative and seller financing, because that was one of my questions that I was going to have. What kind of trends you're seeing to make deals happen for 2023 in the creative financing, investors, seller financing market? So it sounds like you're saying we're going to see a little bit more of that, especially maybe in the first half of the year as opposed to the last half of the year.
Yes, some non-traditional, if you will, means to raise capital or to make sure that potential buyers have the wherewithal to be able to complete transactions if both the buyer and seller are motivated to get the deals done.
Right, exactly. So what about commercial construction? So, we've noticed kind of a slowing of construction and commercial construction, which could be a number of factors. And I'll let you talk about that, though. So tell me what you're seeing in commercial construction and what you think the prediction is for 2023.
Sure. And basically, there's three components that go into the overall health and well-being of the construction industry. It's materials, labor costs, and margins. And materials, we're likely not going to see that supply pressures ease that much in 2023. Labor costs, there may be an increase in labor costs as well as the labor market, in that sector may tighten a bit. In terms of the margins, rising construction spending in 2023 could result in higher margins. So the overall outlook for commercial construction is not necessarily rosy, but it's not going to be as bad as it was in 2022. We're going to see, I think, a nice uptick. It's not going to go back to the levels that we saw pre-pandemic, but there'll definitely be an uptick over 2022 is what we're expecting. And keep in mind, the Fed's $500 billion infrastructure program, which I know, again, anecdotally, Western Pennsylvania has benefited from, along with the entire Commonwealth of Pennsylvania. Those dollars, I know, are being spread around the country. So a lot of those civil engineering firms have major projects associated with that Fed campaign or program. So that should continue to benefit the construction industry as well.
Okay. All right. Maybe not necessarily directly benefiting our brokers or lenders, but possibly,
Right. Yeah.
infrastructure is necessary to bring businesses and people into the governmental entity anyway. So that it's all good. So
Definitely. Yeah. I think that there is definitely a residual positive impact
yes,
from that program that
I
will
agree.
benefit our industry. Yeah.
Yeah, I agree. Okay, one last question. It's about
Okay.
25 after. We want to leave a couple minutes for questions. So,
Sure.
what do you see as the top 3 challenges for commercial real estate in 2023?
Just what's going to happen January 31st? What's going to
Okay.
happen beyond that? I mean, it goes without saying, you know, investors in commercial real estate already have an appetite for risk. We understand that. However, uncertain economic, the uncertain economic outlook in general definitely hurts us in our industry. So, that's why the first 2 quarters may be a struggle, but until we have a little bit more clarity on what the Fed is going to be doing moving forward in terms of interest rates, that's going to continue to cause a little bit of paralysis by analysis, I think, and we won't see as aggressive numbers of investors within our space. The office market plays such a key role in retail and even to some extent multi-housing or multifamily housing, I should say. Because when people are going into the office, you have a more vibrant downtown area. You have people going out for lunch, going out for dinner, and also supporting new projects in terms of apartments and condominiums and so forth. So getting employees back into the office, I think, will be a potentially continue to be a challenge. I know you probably saw it as well. I think the mayor of Washington, D.C. was voicing concerns to President Biden about the lack of federal employees going back into the office in Washington, D.C. That's just one example of, urban areas that could really benefit from at least an increase of hybrid work to 2 or 3 or 4 days in the office. So I think that will really continue to be a challenge and for the health of commercial real estate overall. So, the softening of the labor market, it could change that a bit where the employer has the upper hand again. And listen, we have quality Class A space now that we're moving to. It's amenitized. We have what you're looking for. We need you to come back into the office because we see benefits to having employees together collaborating. So I think that's going to continue to be something that you want to keep your eye on. And then obviously both construction and operating costs moving forward, particularly operating costs for office, industrial, and retail. We've seen inflation start to be reduced over the last month or so. Hopefully that trend continues. Because the cost of operating and maintaining, real estate assets can be deeply affected by inflation. So that's another challenge that we see as well. Okay. So, but I don't want to be doom and gloom. We're not at Colliers. Again, we're looking at it as a soft landing from the recession, and that towards the end of the 2023, we're going to see an upswing. So
so we're seeing some light at the end of the tunnel. That's what we always like to hear.
Yeah, and we're seeing, decent activity right now, and we're hearing positive things, a little bit more confidence from our clients. So I think all of that is good.
It is good. We do have a question from our audience. Are you seeing a trend in the sale leaseback transactions?
Yeah, great question. Anecdotally, or in the Pittsburgh market, not really as much across the country. That's something that is definitely of interest from a brokerage standpoint as an approach to the marketplace. We provide broker opinion of values for assets, and again, the sale leaseback a lot of times is predicated upon the owner of the property looking for an infusion of cash or looking to capitalize on a strong market that, they could get the maximum value for their asset that they're operating out of. So I'm not sure if that marketplace exists so much right now. Perhaps, just conjecture on my part, if there's limited acquisition or purchase opportunities for investors out there from a traditional standpoint, and they have dollars to spend that they want to invest, then perhaps that could make sense to knock on the doors of some owner occupiers and to see if they would be open to to the sale leaseback.
Okay. We have another question. What is happening with government leasing?
Well, as I mentioned in Washington, D.C., the leases that the federal government has on the books right now are being underutilized.
Right.
So, I mean, the trend for government leasing is likely similar to what we're seeing overall in office, in the office sector, which is, smaller footprints and a reduced amount of space that is needed by a lot of those government entities that would typically otherwise have employees in the office 5 days a week. They're relooking at and re-examining their use of their office space as well. So we haven't necessarily seen an uptick in demand from state and federal agencies.
Right. Until they demand that their employees come back in the office. Right.
Yeah.
Okay.
So.
All right. Well, we are past our half-hour time. We really appreciate you, Ed, for being here and having this conversation with us. And thank you to all of our viewers. We will be recording. We have recorded this webinar, so it will be available later on our website. And thank you so much. And we look forward to our audience coming to our next presentation. It will likely be in March, and we'll send out the invites for that.
Thanks, Maura. I really enjoyed it. It was a fun conversation.
I did too. Thank you, Ed.
Okay. Take care.
Bye.